Good morning, everyone, and welcome to another edition of Bleeding Crypto's Morning Brief. Today is Saturday, January 14th. I'm trying to delete some of these lines here. Give me 1 second. And hope you guys are all having a good morning. I am going to be drinking my coffee. I am almost done with it. But I wanted to start the video. There's a lot to talk about, a lot to look at. So we've had an incredible, I would say, blow off top, or well, maybe not blow off top, but an incredible move, incredible impulse parabolic move yesterday, more than any other day. We've been building up to it, and it's been incredibly bullish. We've been pushing up, but nothing to the degree that we went through yesterday. So I want to talk about that. I want to touch on that. Biggest question I've been getting from the community and from people on Twitter is 886 off the table. So let me answer that first. Let me see, where is that chart? I posted a chart. Man, here it is. So here are my thoughts as far as is 886 off the table. For me, at the moment, I don't think it is. And let me explain to you what I'm looking for and the reasoning behind it. And when would I consider 886 off the table? So at the moment, as you can see, the weekly time frame, we had an incredible week. We had a 21.60% move to the upside compared to 21.99% to the downside that we had here. What was this? In November. On the last move to the downside, the last time we had a capitulation. We had a beautiful market structure and played out confirmation right after that neckline, and she did everything that the price action is supposed to do. What I mean by that is back test, complete the market structure, hit the resistance right at those major levels. The 30 EMA and the 300 EMA were basically neck and neck. And we also did it with good volume. So it wasn't fake volume. It wasn't like the volume ball were small and the move was going up. So this was a really real move, opposed to seeing these moves where it's not supported by volume. So a lot of great attributes. I cannot take away from the run that it had. However, here's some things that I'm looking at, and I want to explain them so that people can understand that it's not that I'm just sticking to 886 no matter what. It's just that we haven't broken through any major levels. We basically just gave back. It's all we did. We gave back. This is the FTX. I believe this is FTX. I'm pretty sure this was FTX that brought the market down. All we did is give it right back. So if we look at this whole event, and you were to take away this whole event, we're here. We're back here. Now here we were still in a downward decline, but however, this did happen. Volume came into the market. We saw a lot of interesting things with liquidations in the way the market were going after these massive short contracts. So these are the points that I still want to see hit to reverse the trend. Remember what I talked about yesterday. This here is not the valley of death. This angle down, this downward angle is not the valley of death. Did we break the downward angle with this candle? No, we did not break the downward candle. To break a downward candle, you have to look to the left and you have to look at the prior high. Did we go above the prior high? So the prior high here was 21.4773. Did we break that? No, we did not. Did we come close? Absolutely. Why didn't we break it? Well, we had very difficult area of resistance. Look at the 300 EMA. This is not, we've seen it. We followed it on every time frame. It's not something that is going to break that easily, especially when you have another important EMA, the 30 EMA right above it. So we have a lot of stacking going on EMAs. because of the intensity of this drop that we've had. So we've got 30 and 300. We've got the 50 and 200, and we've got the 100 and 120 above here. So as of right now, I would like to see this prior swing high taken out, this prior swing high taken out, and this prior swing high. When we do confirmations, how many times do I normally look for a confirmation? 3 times, right? 3 touches. It strengthens and kind of proves itself that that is a valid area of support or resistance. There is no different in TA. Now, this is not something I would say that's textbook. It's something that it's a preference. Well, there's a lot of textbooks that do say for support and resistance 3 touches. You know, most people preach that. But I don't know if there's anything that preaches knocking these out. I just think it's a good way. It's a good rule to follow when you view the market and you're looking at any type of technicals. You want to see a 3. You want to see a 3 touch for that confirmation. So knock out this one, knock out this one. Now this one won't be that easy because we have 3 things that are going to act as resistance. We have the prior lower high here, the prior high. Then we would have the 200 EMA. Then we would have the 50 EMA. Could it happen? Absolutely. If the market has reversed and we're back into a bull market, this will pause. It's not going to go blow through it because we reverse and we're in a bull market. It's going to follow the same TA principles. It's probably going to hit, get some resistance, pull back. When we pull back, guys, you have to understand what that does. That re-energizes the momentum. That gives liquidity back to the market in the form of profit taking, and it allows that rubber band to be pulled. And it gives the market makers, the fuel to push it forward. So it's not like it's sustainable to just go up, because it took a lot of money to bring an asset like crypto. That's, I don't know. We probably hit $1 trillion. We're probably back at $1 trillion. Let me see here. Let me see what the market cap is. Yeah, we are. We're back at $1 trillion. So it's not going to be something where it's going to be easy to just break through. So those retracements, they serve a purpose. It brings that liquidity back to the market so that we can, that profit. Also, it creates a lot of euphoria, a lot of dopamine. I made profit. Let's do it again. So it's a lot more plausible that if we pull back, we can definitely continue to move forward. I'm looking at this here, and I don't think I don't see a sign that this is the end of this move. This can 100% continue. Even though I haven't taken 886 off the table, I'm not going to sit here and say that from here, we're going to go down to 886. Just like I'm not saying that we're reversing the trend. The market has to prove it to me. So let's talk about this for just a second here to finish my point about 886. If we reclaim this section here, we have taken out 1, 2, 3. We have confirmed the reversal of trend. So this downward momentum is now officially reversed. It is now sitting on a very important EMA. And I would say 886 is off the table. For me, it'd be off the table. Now, keep this in mind. If this doesn't hold and we roll over, that becomes very dangerous. That 886 is back on the table. Every person here who understands TA, who does TA, you do TA on a Monday on an asset. By Monday afternoon, you probably have to adjust it. Why? More data comes in. More data comes in telling you different, adding to the analysis that you made in the morning. So things change. Because things look bullish at 8 o'clock in the morning on a Monday doesn't mean it's going to look bullish at 12 o'clock in the afternoon. It can completely change. That's why we have the 4 rules: entry, exit, R&R, and stop loss. Why stop loss? If you did your analysis and it's going up or going down, why do you need a stop loss for? Because things change rapidly in any market, not just in crypto, but in any market. There's more data coming in every time, and things could happen. Things shift. So to answer everyone's question, until we reclaim this, it is temporarily off the table, in my opinion. And we're seeing obviously a confirmed reversal of trend. And then we start looking for higher targets, maybe some consolidation, some higher targets, and we'll take it from there. It's tough for me to just say, yeah, we're going to hit here, and then we're going to come down here. We don't know. The market right now is acting irrational. Now, for those who study TA, you can pretty much look at your tools and say they're no good. Your tools are no good right now. Your RSI is no good. Your MACDs are no good. None of that stuff is really good at the moment. The only thing so far that's working for me that I've noticed that's getting respected, only one thing, the EMAs, which is the equivalent of support and resistance. That's it. Everything else has been blown out of the water. None of it. And the funny thing is that I was thinking that was just me. Maybe I'm not reading it right. Most of the analysts that I'm looking at are saying the same thing. They're like, the tools are no good right now. You just got to go with it. And that's what happens sometimes in markets, especially when they're recovering after such we've had nothing but massive downfalls. Look at this. We've had some just extremes. The market was starving for liquidity. It was starving for dopamine. And the market makers gave it to them. And at the same time, because of these extremes, they made a ton of money. Because you have to think what they were doing during this entire time, guys. Remember what me and Mr. Mo continue to tell you. Trading is not about knowing TA. TA is the easy part. You can learn TA in a matter of a couple of months. You're probably even less than that. But let's just say average person that doesn't have a lot of time in their day can become an expert in 3 months. It's the psychology, the conditioning that the market does to your psyche that's the difficult part. So the reason I'm mentioning this is because as we're falling for half a year or more, more than half a year, it creates a certain psyche. Down, 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 down. And people will look at the chart and look, okay, every time we go up, we go down. Every time we go up, we go down. That is ingrained. They conditioned you for over 6 months to think like that. So as we're going up here, you saw what was happening. I was giving you a play-by-play of what was going on in the market, in the derivatives market, which is driving this market. People kept on shorting every single bounce to the tune of hundreds of millions of dollars. And you saw them, they wouldn't stop piling it on. So that was driving. They had liquidity. They had liquidity to pay out the longs. I'm sure some of those got paid. A lot of them got paid, but they still made a net profit. I looked at Glassnodes yesterday, and the net profit yesterday was, I think like $643 million for yesterday. So, because you got to think, they make all that money to the upside, but they're paying people to the downside, the people who are long in contracts. So they have to subtract that from their profits, making a ton of money. The conditioning was right. The conditions were just right. But at the end of the day, Bitcoin did not break any major levels. So I just want to make sure that everyone understands that. It's been bullish, yes, it's great, but you have to also just take a step back. Take a look at what did we do? We haven't reversed the trend. We caught up with November is what we did. We caught up. We invalidated this move here, and we're back up here. I want to say invalidated, but you know what I mean. We just basically made this up. So at this point, here's what I'm looking for. I think there's a continuation until it's proven otherwise. There is no sign that tells me that this has to go to new lows. None at all until it shows it to me. So I'm going to do something this simple right here. Right there, and I want to look at the 50% line. I want us to hold the 50% line right there. That is usually what we see on a move for a continuation. Now there are two fibs that I'm looking at, and it's going to be these 382 and 0.50. I would rather see 0.50 than 382, and here's why. Always remember the rubber band effect. What is going to give you? Give me 1 second. What is going to give you if you had two guys standing side by side, same exact rubber band, and they're holding it, and one pulls it 30% of the way, and one pulls it 50% of the way. Which one do you think, when they let go, is going to go further? The 50% one. So if we want to see a continuation into here, we need to pull back and give liquidity to the market to get us there. So don't think of it as being negative. Think of it as being positive. And the 50% line also has confluence with the neckline, with prior very, very strong support. Look at this. It has been incredible support. And so has 382. Look, 382, equally strong as far as support for these ever since we had a capitulation in June from those lows. So both of those, but only this one here will give us more liquidity into the market than 382. So a move from there, I would say let's do a harmonic pattern. You know what? Actually, I won't do harmonic patterns because harmonic patterns are literally getting blown out of the water. Like I said, the TA is not being, a lot of the TA is being irrational. Look at the GMT chart that I did for, let me look for 1 second. Let me show you something really quick. Look at this GMT chart. GMT that Jose asked me for day before yesterday. And let me show you this. Look at this. Look at this harmonic pattern. It did perfectly well. Look, it went right to the 50% line. Right to the 50% line. Did the TA on it. I said, okay, from here, shouldn't, if it's going to continue, it won't break the 50% line. It didn't. It continued. And this would be the target of a harmonic pattern. Harmonic patterns are very accurate. And they measure the market very well. And you've seen me use these for years now. And look at this. It's not even close. It is like double of what it should have. You know what? Probably is double. Look, let me see. Let me measure this move here. From here to here was 43%. From here to here was almost 30%. 30%. So it was 30% more than that target there. So that's a lot. We're in a 12-hour time frame. That's a parabolic move with volume. Again, I'm not taking away that this was a fake rally. I don't think this was not a fake rally at all. There was real liquidity coming into the market. And when you look at the higher time frames and you see these volume bars, that's real liquidity. So this is something that I pay attention to. I can say, okay, you know what? Market is trying to say something. Is it trying to say that a bear market is over? It could be. But again, any asset that you look at, you also have to look at the here, hold on. Let me erase. Let me just hide all this. You also have to look at the macro view, and you have to ask yourself, what was the behavior of this asset before this move? It was starving. Look at that. It was starving. Look at what GMT did. Look at this. Look how interesting this is. And I just noticed this right now. Look at this. I'm going to chalk a line, and I'm sure you guys should be able to see what I'm trying to get. Look what it did. Hold on. Look at there, and look at there. I mean, that's beautiful. That's art. To me, this is art. For those who collect NFTs for the art, or those who collect physical art, this to me is art. Look at how beautiful this is. What did this do here? This confirmed the bear break. That's what it did. It confirmed the bear break. So though these moves were impressive and they were great and they were backed up by volume, they are overdue, in my opinion. They are overdue. And please don't think that I'm trying to be bearish or I'm trying to discount what the market did. I'm not at all. But I want you to look at it through a different view, apart from the dopamine and the excitement. I've been there. I understand. I've been where you're at. I get excited too. Yesterday we were flying looking at those, at all the data that was full of dopamine, looking at the way that works out, because that's something that I feel is going to give us such a huge advantage moving forward. The more information that I absorb, the more I learn in this market, the more I see the behavior of this market, the more things look like they're different, but they're really the same. All of that stuff is absorbed in my brain. It's analyzed, and when I see it through a different view that's not just induced by dopamine, it allows me to appreciate it very differently than I used to appreciate it before. I hope that makes sense. I know it sounds like I'm just blabbling, but I hope that makes sense. Anyhow, GMT looks like it's going for it some more. Good for Jose. Let me see here. Let me see what it's doing here. Okay, it's smacking resistance. Again, I'm not trying to kill the momentum, but my brain is trained to see market structures quickly. So when I see this, I think right away, double top. It's confirming a double top. When it breaks this here, it doesn't mean it's breaking. It's probably hunting. You got to think about people who are conditioned to short. They're going to open the short somewhere here, and they're going to place their stop loss maybe 5%. That's the most typical stop loss. So what I would like to do is do this, go up about 5% right here, and then I could say, okay, let me do this here. I'm going to put this, caution this in a yellow, and let me explain to you what I mean by this. A person who's shorting is going to put a stop loss, especially in these conditions. So they're going to say, okay, I think we're going to go down. However, I'm going to put a stop loss here. In case I'm wrong, it is going to knock me out. I mean, I minimize my loss. So as everybody thinks about that, the books are showing the massive amount of stops in a certain area. And it's usually right after the swing highs, right after the highs, because that's the obvious place. You look to the left, you think, okay, if it breaks this prior high, I want to be out of there. So people will assess their risk, and people will do 3%, 2%, 5%. I don't think anybody does more than 5% in this market. I really don't. I think the majority are going to do 5 and below. So that's why a lot of times before coming down, you'll see a wick, a touch here, and then we go down. And that wick is hunting. They're taking out those stops. They're taking out also, remember what I told you guys about the leverage short positions. 100x, it needs 0.46%. A 50x, I believe it's like 2 point something percent. So not only do they take out the stops, but they take out those, guys are putting in those 50x positions to the downside. It's liquidating them completely and taking out stops. So basically, this becomes a big liquidity pool in here for the market makers to tap before they bring it down. You break above this, it becomes a confirmed move in my eyes. Ever since I've been following the data, the on-chain data and the liquidation data and all that, this makes a lot more sense to me. And it gives me a better sense of a true move when I see it come up in here versus what it really is, a liquidation move, a tap of liquidity, and we come back down. That's why a lot of times you'll see where later on we come back up to a certain area, we go just slightly above it, and then the move is done because it's been trapped there. The longer the liquidity stays here, guys, trap liquidity or even spot buyers, they want to get out. So what do? They will put their sell order. That's also that's basically trap liquidity. They put their sell orders here. They say, okay, I'm down here. Oh man, if I can just get up there and break even, I'm going to go ahead and put an order there at break even. And once that comes up there, at least I'm out of that position. And typically you see that with greater wicks. When the bigger the wick, the more liquidity is trapped in there, because you have to think of that entire process of what happened with that candle. So let's just say this had a bigger wick. So you have all these people buy. These are all buys. The market makers pull the rug, boom, they sell. From that point on, when that candle closes, all that everything in that wick there, those were all the buyers that basically the market maker said, hold my bag. So now new candle opens and you start going down. And the longer it goes down, the more the liquidity starts to build into that wick because they want to get out of that position. So that's another reason you'll see us go into wicks, which is like why we preach. Wicks are, markets like to fill wicks. They like to fill wicks because there's a lot of liquidity trapped in that area. All right, so let's go back into this here. Let's go back into here. Where was that chart? Okay, so I think I was pretty clear on that. We see a move here. Okay, so let's just, for shits and giggles, let's just look at a harmonic pattern. Let's look at a harmonic pattern just to see if we can get, I think I did this. I think I might have done this yesterday. I feel like we did this here. Look at this. Look at this. Look how exact this works out. Look at that. Right into resistance. By the time this plays out, I'm almost certain that this 200 EMA will be much closer to here. And again, looking at GMT, it doesn't always have to be exact. Easily can see a move right in, a wick right into that 200 EMA. So the TA, as irrational as it is, look, it is really accurate on these moves. Look at this market structure, super accurate. I mean, this is textbook W. Flag breakout. We've seen that pattern. We play that pattern. We live by that pattern here. And there's no reason to think that this is not going to happen. Now, let's talk about the other side of it. Invalidation. That's why I said I'm not removing 886 out of the equation just yet. Because now that the market proved that it wants to, that I can bring the liquidity, that it's moving up, now show me a continuation. If you cannot show me a continuation and you break down back into these areas 618, 786, that is going to do a couple of things. That is going to invalidate. I wouldn't say invalidate, but make it less probable, because we don't see a move like this in a continuation after it goes to 618 or 786. But what do we see at 786? We see a lot of support. So what ends up happening a lot of the times is that, again, going back to that psyche, people are looking for these levels. It doesn't happen. It breaks it. It goes right back down to these lows, and it sucks the momentum out of the market. It sucks the dopamine, the euphoria out of the market. And it starts making people question whether they should hold. Now they bought this thinking it was going to continue. Now they're underwater. Should I keep it? Should I hold it? Oh my God, these guys saying 12,000. Maybe they're right. 886, maybe they're right. And we start seeing that weakening of the market because of that psyche. And we start consolidating. So if we break through here and we start consolidating, then it starts becoming a better chance that this consolidation is getting ready for another move down, because this failed to do what? It failed to break the downward trend. It's still a downward trend. So there was no reversal. There was no meaningful. This is not a reversal. This was just a completion of a very bullish pattern that we play here since we've opened this Discord. This is one of our biggest patterns, W flag breakout. We got one part of it. We still have two more parts to this move. The flag portion of it and the breakout portion of it. So we completed one part, and we completed it beautifully. I mean, just textbook. So, and with volume. Again, I'm not trying to take away from what it did. I'm just trying to give you a rational approach on how I'm viewing this and to answer everyone's questions about 886. You come back down here, 886 is still very much on the table. And then we'll see where the market is. I have orders to buy this here. break 0.50 and it's invalidated. I have orders because nothing has shown me that there's no reason why we can't continue. And I think for me, the biggest seller is going to be the volume. The volume. If this candle would have printed with a volume lower than this or equal to this, I would say, no, I'm not. This is very unlikely it's going to continue. But it didn't. It brought the volume with it. So there's nothing here that tells me I shouldn't play it as a continuation. I shouldn't buy the dip. And let's see what else. I wanted to touch. So I hopefully I explained that in a manner that you guys can understand. And let's move on to, let's look at ETH. Everything is pretty much going to be, I think, very similar, guys. ETH, guys, is much weaker than Bitcoin at the moment, where we've been watching Ethereum lead the market. Now, look at this. Let me go to the 4 hour. This really shows you. Look at this. Look at this. So this shows you how much stronger Bitcoin on this move in the past couple of days has been compared to Ethereum. Yesterday, when Bitcoin did that last push, Ethereum was lagging behind. It was in the mid 1400s, and it stood there during most of the move of Bitcoin. It stood there on that last push. We finally got that push up and got us into close to that 1683 target that we had. I think it missed it by like $9. But look, it gave it right back. So it pretty much invalidated this. This is not really. It just gave it back. It gave it back. Look, it gave it right back here with volume again. So this just tells you that the Bitcoin is sucking the wind out of these majors. People are focusing on Bitcoin. They're not focusing on these majors, which is, again, typical. This is not to say that Ethereum is not going to survive. Ethereum's not going to go back up. I'm not saying that at all. I'm just saying that we have been seeing the opposite. Look, we have been seeing Ethereum. This is when you see ETH, BTC pair moving up, that just says basically you're comparing two coins. Which one's better, Ethereum or Bitcoin? This is telling you right now. This is giving you a good visual. Nope, it's Ethereum much better than Bitcoin because we have been on a tear until now. So I am going to wait and see. The TA on Ethereum, basic principles still apply. There are some fair value gaps down below. These are just like my gaps on the charts. There is no time frame when they're going to get filled. But however, they still put a lot of downward pressure as more often than not, these fair value gaps do get filled. So we'll have to see if this time it's different, if it gets filled, if it doesn't get filled. But for now, we're not really focusing on this. This can be focused on later. Right now, we want to focus on continuation. What is in store for Ethereum for a continuation move? So let's look at Ethereum. And let's see, again, I haven't really done any TA on this because I've been just focused, well, you guys saw me, I've been focused on just Bitcoin. So let's see here. Let's do this. Let's do the same thing we did with Bitcoin. So we got, just a bunch of lower highs. So this is, let me turn on my magnet. Give me 1 second. Week, right there. So we got that lower high. Then we have this lower high, and then we have this lower high. Okay, there we go. Now, the price action stopped right, very similar to the 330 EMA on Bitcoin. This stopped at the 200 and the 30 EMA. Very strong area of resistance, and it also completed the W just perfectly. Again, I mean, just textbook, unbelievable, really, really beautiful. The 1683, I mean, it would have been nice, but once you clear this candle to the left, you've pretty much completed it. Whatever wick is here, or whatever trap liquidity is here, is generally tapped, but it doesn't have to. We usually play the candle body for the completion, and everything else is just a bonus. And again, you got to look at it the same way I explained the Bitcoin. This is all trap liquidity. People that bet it, that bought the market here, Market sold it out underneath from them, and now they're trapped and they want to get out of their positions because they want to buy it lower. So you have a lot of liquidity that normally will get tapped in here. But of course, Bitcoin does drive the market. So if Bitcoin's momentum is greater, it makes it less probable. It makes it more difficult for this to continue, which is why I've been really following Bitcoin during this move. So let's just say here, very similar price action, except I think this one's a little bit more bullish in the sense of the macro view, because look at where the EMAs are in comparison to Bitcoin. Look how high Bitcoin, the EMAs on Bitcoin are in comparison to, look, we'll do this. Here's a the current price action to the last EMA. Let me just pinch, make sure, no, there's nothing, there's nothing else over there. So Bitcoin needs 35% to get above all the EMAs. And we know how important that is, because as long as you remain under the majority or all the EMAs, you have a lot, the market is bearish. The market is bearish. When you are above all EMAs on a weekly time frame, we're in a bull market. Don't take my word for it. Look over here. There it is. Look over here. See this? Get above, we're bull, 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 bull. We get below it, it makes it more difficult. We're in a downtrend. We break below it, yeah, we're in a very bad downtrend. When you get back above it, what happens when you get back above all EMAs? This is a weekly time frame view. Look at 2017 bull run. Where were the EMAs? All below the price action. Where are all the EMAs now? Most of them are above the price action. So when you go back to Ethereum, you look at this and you look at the percentage needed to get above all EMAs, it's 22%, 22.5%. And Bitcoin was 35 and change. So it goes to show you that Ethereum has, even though it's lagging a little behind on this latest move, it has less resistance than Bitcoin. But we already all know this. Ethereum will, at the end, turn out more ROI than Bitcoin. It always has. That's one thing that has never failed. It's constant. And we've already done the research. We've gone back on CoinMarketCap. We've gone back in the charts, comparing both of them through the entire move. And Ethereum always wins in ROI. You'll always make more money with Ethereum than you will with Bitcoin. So that's my take on Ethereum. We're just going to have to wait and see. I imagine this is going to follow Bitcoin very similarly as far as the pullback. For if we're going to see right now, I am looking at this as a continuation, not as giving it back. So this will be, because it's weaker, it's now going to follow what Bitcoin does. So we could TA this and we could say this is where it's going to stop. But you know what? We thought this is where it's going to stop because that's the end of the W, and that's the end of the W for Bitcoin. And the market proved that Bitcoin is still in control. And we didn't quite finish what we thought we were going to do. That's why I had said earlier 1683, that was our target. We didn't quite make it there because it fell short. So we could TA, yeah, you can just go, we can do one of these here, look at the 50%, falls confluence again with that neckline. So let me do this here, right there, and let me just put here. So we can say this, and we can put our order there, but I think the safer move is looking to see the reaction when Bitcoin pulls back. Let's look at the reaction, because if it failed to meet it on the way up, it may come down much stronger than it normally does. Normally we see a 2-to-1 ratio with Ethereum against Bitcoin. Shitcoin's 3-to-1 ratio. This may go 2.5. So we may blow through it. Does that mean that this won't go up, won't continue? No, it doesn't. It doesn't mean that at all. It just means that it's lagging behind Bitcoin. So this can easily go to 618, 706, and the equivalent of Bitcoin's 0.50 retracement. And when Bitcoin recovers and continues to move up, if that's what it's going to do, this will move up. So the scenario that I have for Bitcoin invalidating, not invalidating, making it less probable that if we break the 0.50 and we come down to 786, that we're going to continue, that we're going to have the next impulse up, that it makes it less probable. That wouldn't be the case with Ethereum. If Ethereum were to pull down to 786 and Bitcoin pulled down to the 0.50 reload area and Bitcoin takes off, this is going to take off as well. That's what I'm trying to say. So hopefully that makes sense. But it doesn't mean that this is not a bad area to buy. I just think it's a risky area to buy, because if this goes down to 786 and Bitcoin's at 0.50 and Bitcoin fails and goes to 786 and starts consolidating for maybe another leg down, you bought all the way up here. So you're severely underwater. If you're a day trader, that's, you're concerned. If you're an investor, no big deal. You absorb that. You buy it lower and lower that dollar cost average. So it just depends on who you are as a trader or an investor. It's going to change your mindset and it's going to change your plan. So for I'm talking about day trades more, or even swing trades. This is going to matter more. Long-term investors are going to be like, oh, I don't care. I'm holding it for 3 to 5 years. Okay, good. Then here's what's funny, guys. People will say they're investors, they're holding it for 3 to 5 years, but yet they're glued to the charts. So if you're an investor, you shouldn't be glued to. An investor should be like a 401k. That's exactly what should it be. Do your parents who have 401ks, have they even opened a chart in the past 5 years? Most people don't. Why? Because they're long-term investors. They don't care of the day-to-day. But the people who tell you that they're long-term investors are usually people who bought it thinking they were going to make money. They got rugged with these wicks, and to make themselves feel better, they will say, oh, no, it's okay, I'm a long-term investor. A long-term investor, there's two types of long-term investors in crypto. Those that do it by choice and those that do it by force. And when you get caught up here because you want to get greedy and you did not want to take profit and it drops, you now become an investor by force. So there's different ways to look at people that tell you that they're long-term investors. Usually, most people in crypto are by force, not by choice. Very few are by choice. Let's look at LTC. Litecoin is just, we've already done the TA on it, and we finally broke the 300 EMA. I mean, it's looking really good. But again, remember, all the data we did here was for the halving here. And look, we still have time. Remember the 133 days that we looked at for the prior halvings? We still have time. So stink bids still in place. If you come back, get reloaded, move up, great. If not, it's okay. There's over 20,000 projects in crypto. We're fine. We're going to be okay. But this is moving. This is super strong, really, really strong. Again, look for Bitcoin's move to the downside and see. Oh, there's a gap. I think there's a gap right there. I'll have to look at it later. In any case, there's enough move. There's enough reason to come down, especially if Bitcoin comes down. It's all going to be really is going to come down to Bitcoin and what it does for everything across the board. I don't care how bullish your coin is. It will not survive Bitcoin's a Bitcoin drop. I'm not saying it's going to drop. If Bitcoin just says, this is all I'm going to do, we're going to go down to revisit the prior lows, every single coin will go down. So just keep that in mind. Let's take a look at Sushi. Ooh, big drop. But look at the recovery. You see this recovery? This is a massive drop and a quick recovery. This is what we normally see in a bull run. 11% drop followed by a 9% recovery. These moves, I'm not going to minimize their validity. They are very strong. The market wants to run. This type of retracement is reminiscent to what we saw in the bull market. I'm not saying we're in a bull market. I'm just saying this price action is just like it. And again, when you look at these charts, give me 1 second. Let me show you. Let me hide this so it doesn't look so messy. When you look at the macro view, you see, the market is just still inside of this bottom range. So I've read a lot of posts. People, I missed it. Oh man, I missed the run. Look at the weekly time frame. What did you miss? You missed a few days. Was this the only time that sushi was bullish? Look at this move. 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 Look. You didn't miss anything. You're literally still on the floor. You're still on the floor. So I just want you guys to have a realistic expectation. Don't get all depressed thinking you missed anything. From this point on, guys, look at this. I'm not trying to shill this. I'm just trying to give an example because I know, you know how I feel about coins that have real use case. This still has a 1,700% ROI. So did you really miss something? No, I don't think you have. I don't think you've missed anything. So look at this retracement. Look at this reversal pattern. Beautiful reversal pattern right here. Incredible. But boom, gives it all back. And you see these wicks, guys? These wicks, when you start understanding the way the market makers like to tap into liquidity before moving, you appreciate this more. So you got to think of the psyche. You got people who are shorting it, people who are buying it long, had their stops. Here, people like, this is confirmed. Once it broke here, most people are doing this. Look, let me show you what most people are doing. They were looking at this, and this is how they were trading it. Right here. They were trading it like this. They're like, okay, it looks weak. Okay, we got smacked down. Oh, we got this ugly doji here. I don't think this is called a doji though. I'm not really good at identifying the exact names, the terminology of each one of these, but in any case, not a good looking candle. This, I want to say this is a graveyard doji, but again, I'm not one to be an expert in defining each one of these candles. There's a lot of guys who are really good at that. I'm just not one of them. I look more for like structure and patterns and wicks and understand how to identify them. So you have all this trap liquidity, because these were all people that said, no, we're going to continue, and they bought. A wick is people who bought and are now trapped. These were buy orders that were sold out. Somebody sold, somebody smarter than them sold and took profit and transferred their back to them. They did the same thing here. And you know what ends up happening here? The people who get stuck in here will be like, oh shit, they want to see this candle. When they see this candle, they get excited again. And they're like, I'm going to buy more because I knew we were going to go. I knew we were going to go. And more often than not, they'll add to this. And then again, it takes it away. So now you have people on the other side saying, oh, wow, this looks really weak. I'm going to short it, but I want to see a break of support. When it breaks this support, they short it. So you start seeing this accelerated move. But what ends up happening on the other end of the book? You know what ends up happening on the other end of the book? Two things. People, when they took this trade here, they put their stops probably close to where they entered, or maybe a little bit above. And you've got the orders that we've been following. They start popping up. That's why you see me refresh the HyBlock data. Boom, they'll pop up for, we seen orders yesterday for $218 million. People trying to piggyback on this here. And what does the market do? Nope. Hold on. What's going on? And these orders start to really get scared. And then they'll drop it some more. It gives them the confidence. Oh, no, I'm going to add to that. And they're like, oh, really? Okay. Boom. They come and just take it. So a lot of times, this isn't trap liquidity as much as this is. These are usually going to be market maker signatures. Whenever you see these here against these are usually market maker signatures. And we saw that yesterday. We saw it play by play. I showed you that yesterday. I would mark it out. I'll say more likely we're going to hit here. And what do? Boom. We went right up, hit it, and came right back down. So a lot of the times this is just a hunting, but this is the true liquidity in here. The true liquidity being trapped. Now, I'm not saying that this isn't liquidity, but this is more of a market maker move coming down, hunting stops, taking people out, making people think that they're going to be okay. removing their stops. Because you got to think also it's all psyche. People who are now freaking out here, who trapped in here and put their I'm just gonna put my stop at break even. They start seeing this. Oh, never mind, I'm good. They remove it, and it gives them again more liquidity to tap into later, or better yet, they sell underwater, and they give their backs back to the market at a discount to the market makers, because you bought it high. Now they're buying it low. They sold it to you high, and now they're buying it back low. That's all it is. Simple math. Doge, same thing. Look at the drop on Doge, guys. Look at this drop. But look what we actually did. 50 EMA. 50 EMA. 50 EMA. This one to the 100, 120. So did this one. But this 50 EMA kept the momentum intact. Look, we bounced right off of it. Now we're struggling. Now we're underneath. Well, now we're technically above the 9 EMA, but not much. 9 EMAs at 86.96. Current price 87.04. So there's a little bit of a few cents, but it can roll over at any moment. But this doesn't look really good for continuation. This looks like it's starting to weaken a little bit. These wicks are promising, because remember what I call these? I call these bull horns, right? These are the scars of the bulls. So market is coming down, the bulls are coming in with their horns and leaving these horn marks, opposed to the bear claws that I like to use as an analogy. So this is the bulls. The bulls are fighting. The bulls are picking up. The bulls are lowering their heads and thrashing to the upside, trying to keep the market for a continuation. So right now it's really no man's land. We're going to have to really focus. I think more than anything, Bitcoin is going to tell us whether the market is going to continue. And one way of knowing that is if Bitcoin can go sideways. If Bitcoin can go sideways, it gives confidence to the market that we're going up. Even if it's not, even if it's going to continue to come down, it gives the market the confidence, hey, okay, Bitcoin is not going down. Let's go. And you'll see a lot of times where these coins will run while Bitcoin is consolidated and trying to figure out what it's going to do. BNB also hit a wall of resistance, gave some back, but look, it didn't do anything different than it did here. It bounced right into key support. So this isn't yet, in my opinion, a reversal yet. Yes, we're weak because we're underneath the 9 EMA, but it's not the first time we fall into support EMAs and then bounce right back and fall underneath the 9. Look, we fell underneath the 9, but this bounce was valid. We kept on going. So let's see how it goes here. I've got some comments on the Discord. Let me look in here, see what people want me to look at. Let me see if there's any requests. Give me 1 second. Okay, lever. Okay, I have a request for lever. Give me 1 second. I think I have it right here. So I've got lever. He wants it on futures. Give me 1 second. USD. You know what? We're gonna stick to Binance. I'm gonna stick here. I'm gonna stick to the chart that we're in now. We have. Look at this. Look at this profit taking. It gave back everything in the past 3 days. Imagine all of this momentum, 3 days of upside in one hour candle. It gave it back. However, look at the bounce. Again, these types of bounces is what we saw in a bull market. I'm not going to discount that. I got to give credit where credit is due. So I'm not going to sit and tell you that this was fake. No, I don't think this was fake at all whatsoever. I think it was overdue because, look, again, I haven't seen this on the weekly, but wow. Well, this one is new. But again, even though we're new, even though it's new, I don't know what it is or what this does, and this is just a request, it's still at the bottom. You didn't miss anything. You're still at the bottom. Who knows what this coin's going to do? Look, this is a nice W, or well, that's not a W. A W doesn't really have the center up here like this. It's more like an Adam and Eve. I would call this more an Adam and Eve. Adam and Eves are usually pretty bullish patterns, and they break up. So this still has a lot of room to move, and it's very volatile, as you can see. Very volatile, which is great for traders. Great for day traders. Absolutely great for day traders or scalpers, but massive, massive volatility. So let's see here. You know what? Let me measure something. I'm really impressed by the way this give back. No, actually, no, I'm gonna be fair. Go to just this candle here. In one candle, 18%. So this went up for 3 days, 18% for one candle to just knock it. Now think about this, guys. Here's a good lesson on how market makers take your money. So we have been conditioned that this is a bear market, and it is a bear market until proven otherwise. And if you're in a trade, what do? They tell you, write up your stops, or put your stop losses on. So as you're going up here and you start writing your stop loss and you think, oh no, this is going to go forever. You lax, and you let it go. And people are writing this. This came down and knocked everybody out. If you had your stop losses close, great. Then you were able to secure a lot of this move. Because if you're writing your stops all the way up, at some point when it gives it back, no big deal. You took the majority of this. But if you left your stop here, if you bought this here, say for instance, you saw this and you're like, oh my God, if it comes down, I'm going to buy it. Because that's usually, the psyche. When you see this, everybody's FOMOing. I'm like, oh my God, I missed it. I fucking knew it. It comes back down. People are like, okay, I got another chance. And they buy it. And it's writing. This just came down and knocked all the stops. They just took it back. So you have to be careful in a market like this that you keep those stops pretty tight just to secure those profits. Unfortunately, on these moves, most people think that it's going to all-time high, it's never coming back, and they're not thinking about selling. They're not thinking about profit. They're thinking about all-time high and above. And that's an unfortunate way of thinking. Wow, look at that. Look at mask. Oof, look at the way it gave back. But gave it back right into a very important key EMA. And what did it do? Bounce right off that key. Look at the volume. This is real profit taking. Look at this sell volume. Real profit taking. This came down and knocked everything from 3 days. 3 days of work. Imagine you writing this. That you didn't have a stop loss. They came and took your shit. So nice things that it has a nice bounce. So, if you believe that this is going to continue, I mean, this is a very impressive move. However, we're not out of the woods just yet. Let me get my. Oh, you know what? I do have it here. Hold on. There we go. See, this is what I don't like to see. If you're recovering and you're holding, and now you're on the other side of the 9 EMA where, see, you were in support. I really want to see this as a continuation. I want to see this come back up. Want to see that come back up. It'd be nice. GMT. Oh, I think we covered that already. Okay, let's look at HyBlock. So I zoomed into HyBlock. Let's do this. Let's refresh it. Let's refresh it. And let's look at see what the ratio is. Oof, look at that again. The ratio for longs to 11 divided by 98. Oof, the ratio is 12 to 1. 12 to 1 on longs, and look at the delta. Look at this green. It's just adding to that pressure of building that pressure pot for a downward move. Typically, when we see this increasing, we increase the chances of a violent move to the downside. There's no time frame. There's no time frame associated to it, but we follow this enough to know. We follow this enough to see as this gets higher and higher, when we see the move to the downside is usually predicated by how much higher this moved compared to what we normally see, something like this. Look at how much higher we're building up. Look at all of these longs that are basically screaming to get liquidated. Now let's zoom into the local price here. Actually, let's go here. Let's zoom into here. I love HyBlock. HyBlock is amazing, guys. Send me a DM if you want to for a referral link. If you guys want to sign up, you can do a monthly on HyBlock. You don't have to pay the yearly. You can do the monthly, month to month. Great source. So look at what we did here on this little push. On this little push just a little bit ago. Remember, this is the 1 minute chart. This little push that we had not too long ago, we wiped all of this. Look at these millions. Look at this. 70 million, 56 million, 75 million, 26, 31, 32, 23, 26, 98. I think we had a couple of them. 98, 62. No, 98. Okay, one. Well, actually, no, I'm sorry. We did not take this 98 out yet. This 98.25x, we haven't. So we took, when you look at this side here, when you look at the right side, you see all this white. So you basically removed all of these contracts. You took all these contracts up. And as it's falling down, you got these guys piggybacking. They're like, I'm going to short it. 50, 30, 38 million, 70, 38. That's a lot of money. So you'll see a lot of times where they'll stop. And look, they came down and took all of these contracts. They wiped out 72 million, 26, 54, 28, 112, 24, 31. I mean, just a ton. This is what has been driving the market. Look at the density of these lines. And look at when it moves down, look, it clears it. These lines on these moves are basically contracts that open up as this is coming down, like I showed you guys before. But don't worry. The market makers will come back up and knock you out. There's less likely that they're going to pay you. They're going to come down. They're just going to come down after these massive contracts to the downside. And then when they clean them up, they say, okay, you're next. You're next. But now look what's happening here to this side. Look at the difference between this and look at the difference between this here and this here. You see how it's getting less dense, a lot more open air. People are very uncertain. Look at this open air. From this move to the upside to this move, very rarely, look, people were scared. Right in here, only a couple of contracts popped up in here. Two lines, 112 million, and that got taken out. They got taken out right in this move here. And this one for 36 million, that also got taken out. You see how the lines don't extend over to here? They were taken out. But look at this. A lot of this space here is showing you the hesitation now. The hesitation in the market. Now, another thing I want to touch on is the heat map. Look at the heat map. You saw yesterday when I was refreshing the heat map that order came in to help the price action to reach higher prices and come after this $28 million liquidity block. It was a $10.8 million liquidity block. And I zoomed in. I don't know if you guys saw it on the Discord. I posted it. At the very last second, they pulled it. Right when they use it as a carrot. You got to think about that. On the upside, what it does, these are liquidity pools. These are people who want to the market makers want to grab this liquidity. So they are going to go up to grab those orders. And the price action likes to navigate towards that. Likes to give it fuel. Remember, you need inventory to sell for price to go up. So you need that inventory. So the inventory was waiting for it right here. Gave us that night. I even posted this a couple of days ago on Twitter. I said that they're going after this 28, and that when it absorbs that, we should see a move to complete the W, and that's exactly what it did. Again, this is not something to have a crystal ball. This is just patterns that I recognize by studying these metrics that gives me the probability of what it's going to do. It's not always 100% concrete, but it has a greater probability. Now, here's the other side of that. Look what's happening to the downside. So when you have these walls here, what this does, here, I'll show you, I'll give you a perfect example. Look at these walls. These are support walls. So this is telling the price, action when it's up here. You come down here, we're going to hold the price here. We're going to hold it. And when algos see this, when traders, market makers see this, they're going to try to what? They're going to try to front run. They don't want these people to buy in front of them. They're going to try to front run, and that's exactly, look how close we get to these. Look how close we get to these levels. Look at this. Look at this wick here. It didn't touch it. Look at this wick here. Didn't touch it. Look at this wick here. Didn't touch it. And we keep the price action high. This is a lot of support until what? Until it's too drastic, and it comes down, uses that liquidity, and drives it even further down. It sold through it. No big deal. Cleans that up. This line here is telling the price action, hey, I'm not going to allow you to come down. I'm going to support you. I'm going to support you. I'm going to support you. All of these lines. Look what's happening right now, guys. They're removing it. They're removing the support. This is really important to understand what this means. This is long-standing support at 15,055. They are removing it. They are removing it. They're lessening it. This yellow, the most intense is going to be this yellow. This yellow is the most intense. So here on this $14,000 level, look at the amount of orders compared to the green box. It lessens. It went from 486 to 451. And as well, I'm going to keep an eye on this. And then look, this purple is a 287, 331 orders on support. So the point is that this yellow, we want to maintain this yellow if we want to see the price supported at these levels. And they kept the $12,000 one, but they're slowly removing the liquidity, the support for the price action above. And this is something that it's happening all at once. These are all at once. They're removing all of that liquidity, but they kept the 12,000. This $10,000 one has been here for months. I mean, how many times do I post this on the Discord? We talk about this. And since the 6th of January, they lessened. They cooled it down. And this has been here for, I don't know, 5-6 months that we've been watching the 10th. No, probably even longer than that. Most of 2022 had this. We haven't seen this yet. We haven't seen it cooled. Now it's cooling down. The $9,000 level, still strong. They turned this $9,000 level back in December 17th, and it's still holding strong. And again, this doesn't mean that when you see this at 9,000, that's where the price is going to go. It doesn't mean that at all. This just means that market makers are putting their bids. They're putting their orders. They want it at that price if and when it can get there. And if and when it can get there, they're willing to put in a lot of money. Okay, this one's for 657, purchase for 657 Bitcoin at $9,000. They're wanting to buy it at that price. Doesn't mean they're going to, but they're willing to buy it at that price, and they have their orders ready. That's why this shows up on the order book. So, all right, guys, I just wanted to cover the market. Again, just give you a little bit of insight of what I'm looking for. It was a great congratulations to all the bulls. They brought it. It was good. It was real. It wasn't a fake pump. Now let's see if we can get that continuation party. Today's the weekend. It's Saturday. Historically, I mean, can't remember the last time we ran on a weekend, to be honest with you. And this is a 3-day weekend. So be patient. Be patient. Because we are expecting a retracement or a continuation, it may not happen via the weekend. Martin Luther King is only a U.S. holiday, so there's still Asia at 5 o'clock Pacific, 4 o'clock Pacific Standard Time is the opening of the Monday morning for Asia. So we may just see today and tomorrow, depending on where you are in the world, what time frame you are, just a sideways consolidation, not much volume, especially after such a big move. It wouldn't surprise me. It wouldn't surprise me. I have my alerts set, all these dotted lines are my alerts. So if it moves, you know me, guys, I work 7 days a week, so I'll keep you guys posted. I'll have my phone with me. I'm going to be out and about today, but I'll have my phone and I'll have my charts with me. So we'll have to just analyze the market and look for. I'm looking for entries in, what did I tell you guys? Right here. I'm looking for entries in these two areas of interest, 382.50. Let's see if we get filled. If it's going to come down and do that. I'm not saying that this is the end. Looking at these contracts on HyBlock, look at the carrot. Look at the carrot that they have here. $82 million, $133 million, $91 million, 65, 39, 126 million, 75 million, 142 million. These are all people saying, go ahead, drop it. Drop it, I'm going to get paid. These market makers are going to pay me. And we have seen time and time again that the market makers say, I'm not paying you. Yesterday, we went down to 12 contracts. At one point, we were down at 12 contracts. They came and wiped everything, almost everything. And we're left with 12 contracts to, what was it? I think it was 1276. 1,276 long contracts to 12 contracts for shorts. They just wiped everything out. And normally, we don't see them really go after the 25Xers. We've only seen that since when? I think we started noticing that on Wednesday or Thursday that they were going after the 25Xers. They're not giving no one any room to make. And that's why, again, looking at the delta, looking at how this green is building up, looking at the ratio between longs and shorts, this is, to me, it's building and building for a narrative, for a possibility to the downside. That downside can just very well be this. Could just be very well be this. You get down to 18,390, and let's refresh this, and I'll show you what that'll do to the market as far as liquidating the longs. Give me 1 second here. 18,390, we would go 18 right here. 18,390. Give me a second. 18,400. Okay, right up in here. So all of these contracts, guys, everything will get just basically cleaned out. You can see the current price and look at the space. Look at the space right now. People are afraid. Look at the space. This is something we don't normally see. This is what we normally see here, where you can't even see any white of their teeth. Here, there's the market makers are smiling right here. This white is a big smile from the market makers. They're like, come on, suckers. Come on, bitches. I dare you. Look how it's getting. Look at the space here. That matters. Watch and look how thin. Look how thin it is here. These are massive orders, but it's still a lot more thinner. So this here, think about this, guys. This is people saying, you can't get me, to the market makers, and worth hundreds of millions of dollars. You're a market maker. What would you do? All right, guys, I hope this was helpful. Hope I answered everyone's questions. Hit me up on Discord if you guys have any requests, anything you want me to look at. Let me know, and I'll talk to you guys later.